Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. We are in the last leg of our journey in trying to understand the topic audit and auditors. It's nice to have you all here and looking forward to a great session. I greet Gayatri Setya, who is here and greeting me. Anjum Parveen is also here. Sridhar Gopal Rao, of course. Welcome, sir. And Kashish, Dhanalakshmi, wonderful. Nice to see all of you here and look forward to more interaction. If I have missed out somebody, don't think otherwise because, yes. Okay. So we move on quickly to where we left off in the last session. So I think we covered quite a lot of ground. We've covered almost there. We are there. We have covered resignation, I think. Yeah. And we have now in a slightly interesting topic, but also not, according to me, very relevant topic. See, I feel resignation is more relevant when we come to resignation because that happens regularly. You will find that an auditor resigning happens very frequently. I'll come to it. When I come to resignation, I'll tell you why resignation is more frequent than removal of auditor at the AGM. We saw the procedure for removal of an auditor before expiry of term of office. Rarest of rare. Rarest of rare. In fact, if you ask me in a question as a query, are there any cases? I know nothing. Maybe you go down to the RTA and find out, right to information whether any auditor has been removed by before the expiry of his term of office. Now, see, the auditor must have been totally guilty. Rather, he has been totally negligent, totally inefficient. Otherwise, you cannot remove an auditor so easily. Suppose an auditor is asking inconvenient questions or an auditor is holding an opinion and he says he will qualify. For that reason, you cannot remove him. See, suppose you are proposing a certain entry and the auditor is not in agreement with it for valid reasons. See, after all, the audit report itself is an expression of an opinion. Now, when that gentleman is holding a certain opinion, you as a director have only one option. If he is going to qualify, you have every opportunity. The directors, when I say you, I mean the directors. When you as a director, board of directors, every opportunity to counter his comments in your board of directors report. See, if you remember 132, there is a specific item there where you are allowed to give explanation. So you can use it as a double-edged sword. Suppose the auditor is being stupid or unfair, you have every opportunity to say, the opinion expressed the auditor is wrong, etc. That is the correct method so that the shareholder who is intelligent, I don't know about that. A shareholder who actually wants to read the annual report, I seriously don't know about that person. Such a person would be able to get both the views and thereafter form his own opinion. That's all. See, this is the essence of corporate democracy. Rather than removing the auditor because he said he doesn't agree with you. And one more thing, removal of an auditor before expiry of term is a highly time-bound procedure. I would say it is highly time-bound. Everything has to be done within the time. Also, the auditor's removal requires a special resolution. And that too, that special resolution should be passed within 60 days. I'm reiterating because I found last class some of you were still confused here. That is why I'm... So look at the check boxes once again. When you're preparing for the subject, prepare check boxes. Items to be checked. So removal of auditor before expiry of term of office. Pehle board meeting. First, board should meet. It can't be MD ka decision sitting in his cabin. Should be the board of directors. Suppose it is a listed company, independent directors will be there. You have to satisfy them. Even an unlisted, closely held company will have to document it first. And thereafter, within 30 days, you have to file ADT2 to the central government. Then the central government will give an opportunity to the auditor. That is when the problem starts. Okay, then that auditor will come and start giving his inputs. Thereafter, the whole thing may change, which is one of the reasons why no company will want to go into this. Because the auditor will, of course, open the Pandora's box and he will say, hey, you are right, sir, they want to remove me, no problem, you remove. But in the meantime, kindly, are you aware of these things? Oh, is it so? Is it so, Mr. Srikanth? Okay, come. Then what he will do? Srikanth, your removal, we will see later. I'll call Brother, Mr. Director, what is all this? Shall I start investigation into your affairs? It will become it is like they would have left their hands inside the snake's hole. It may termite. You thinking that it's a termite hole, they are putting their hand inside. The snake will come out. That is what is going to happen. But assuming that the auditor is truly inefficient, truly to be removed, then once the central government passes the order, 60 days special resolution. Okay, please remember all these things, checkbox. And when the problem is given to you in the examination, verify any one ingredient is missing. That is it. The removal is invalid. That's all. So kindly try to do that. So again, another AB and associates, a former chartered accountants, are reappointed as auditors at the AGM. However, the board of directors recommended to remove them before the expiry of their term by passing a resolution held on 31/3/2021. Subsequently, having given consideration to the board recommendation, AB and associates were removed at the general meeting held on 25/5/2021 by passing a special resolution subject to approval of central government. Now, let's look at the first. So, two conditions, boss. Who held the board meeting? Okay. First of all, within 30 days, am I correct? Within 30 days, that is 30th April, you should have applied to the central government. Not done. Thereafter, you removed them. I mean, I'll tell you, you will get confused. You know where you will go? You will start counting 60 days from this. Am I correct? What you will do is 31/3. So 30 days is 30th April. Then 1/5 to 30 May. Okay. So 25/5 is well within the 60 days. Also special resolution. So immediately you will conclude everything is valid. No. The problem is the time when the special resolution is see, 60 days is going to be counted only from the date of approval of central government. So that is what they are trying to catch you here. I hope it is clear. That's what I wanted to stress. See how they are stressed. Both the problems are from the examination. Seems to be a frequently tested area. Don't have to mug up, yeah. Just remember the checklist. That is all. Board meeting, 30 days, ADT to approval. Auditor to be given a chance, approval. Auditor to be given a chance, also ignore it. Approval, post-approval, 60 days, special resolution. That's all. Okay. Fantastic. Now we come to removal of an auditor at an AGM. But normally, an auditor will hold office till the conclusion of the next 50th AGM. If it is a government company, next annual general meeting, conclusion of the next annual general meeting, CAG will appoint. So, my humble request, from now on in all our discussions, let us ignore government company. We will talk. Though this section applies to government company also. This section will not apply to government company. Because government company auditor board cannot appoint. It's in the hands of the CAG. So that's a different kettle of fish. If you don't like the auditor, go to the central government. Anyway, every year the guy is going to change. So it doesn't really matter. Whereas non-government company, what happens? For a non-government company, the auditor will be appointed at the end of the first annual general meeting for 5 years, 6th annual general meeting. So now at the 6th annual general meeting, you can always reappoint him, right? You can always reappoint him. For if it is a rotational company where the rotation of auditors applies also, you cannot. So that is the end of story. You have to appoint only somebody else. That is automatic. But suppose he is capable of being reappointed, right? Now, in my humble view, if the board wants to reappoint him, no need to invoke this section. If the board wants to reappoint him, no need to invoke 140 subsection 4. No need. But if some other members, other than the board, see, if the board wants to replace, no, all that they need to do is, he will hold office till the conclusion of the next AGM. That's it. You propose a new auditor. That doesn't need special notice, in my humble view. Though there is a view that even for that, you have to give special. Who should give special notice to who? Because special notice is defined under section 115 of the Act, which you already saw. Management and administration. There you might have seen how a special notice is to be given and what the board of directors is supposed to do. This is common. Wherever in the act, where any provision in the act requires special notice, so they don't say this, that. They say where any provision in the act requires special notice, it shall be given in accordance with Rule 23 of the Companies Management Administration Rules. It is part of the chapter 7. Okay. Still, I'm covering it here because you might have forgotten it and you might want to be reminded about it. So, now remember, notice, there is no ordinary notice. It might ask me, sir, if there is special notice, is there ordinary notice also? No. Notice is given by the company to the member whenever a meeting is to be held in AGM, EGM, whatever, notice is to be given. Notice you already seen, studied, and you are expert in notice with regard to management and administration. Now, there is no ordinary notice. Please never use the word ordinary notice. There is no ordinary notice. Ordinary business hai, ordinary resolution hai. Special notice is a notice given by the member to the company. Special notice is a notice given by the members to the company. Right, sir? Now, how to give special notice? Wherever in the Act requires, Rule 23 apply. According to Rule 23, special notice should be given by such number of members. So, just one member cannot give, or one member holding 5 shares cannot give. Members holding not less than 1% of the total voting power. Okay, so now you might ask me, can a single member give notice? Can. Though the word used here, members, is still under the General Clauses Act. You might have learned it in Management Administration. Under the General Clauses Act, words indicating the plural include the singular. Words indicating the male gender include the female gender. Sorry, that is as per the General Clauses Act. In a male chauvinistic world, Lord Macaulay, the man who destroyed Indian education system, with this provision, words indicating the male gender include the female gender. So wherever the third person pronoun he is used, it includes she. Though, if you really look at the spelling, she only includes he. Yes, he includes he. But also words indicating the plural include a single. So members will include member also. So a single member holding not less than 1% of total voting power can give special notice. No problem. Or if he is not having 1%, if he is holding or she is holding shares on which an aggregate sum of not less than 5 lakh rupees has been paid up on the date of the notice. So, either 5 lakhs or maybe we have already understood total voting power while I was doing dividend or something. Anyway, for the purpose of clarity, total voting power is the number of votes which can be cast, whether for or against, on a poll. The total number of votes which can be cast on a poll, whether for or against. If all the persons entitled to attend and vote. So in other words, having 5 lakh equity shares of 10 rupees each, the total voting power is 5 lakhs. Means if everybody is attending and voting, how many votes will be cast? 5 lakhs. Out of that 5 lakhs, members holding not less than 1%, 5,000 shares. If a guy is holding, or if he is holding shares, an aggregate sum of not less than 5 lakh has been paid up. Again, we are only looking at nominal value, my dear friends, only nominal value. Which have a huge capital. In which case, 1% may be pretty high. So they are saying 5 lakh rupees has been paid up on the date of the notice. Okay. Now, so if this qualification is there, if the number of members is correct, then they can send a now notice. It's simply a letter saying we, the so-and-so members who are signed here, are of the opinion that the following resolution should be passed. So result, Mr. A, auditor, be replaced by Mr. B. Or Mr. B, auditor, be appointed in the place of A who is retiring. Or they can also say, the retiring auditor shall not be reappointed. So they are saying, A, I don't mind, B, C, X, Y, donkey, I don't mind. Not A. Never A. Impossible. Like that. So something like that. Okay. So for example, you find from the notice that they have signed the balance sheet, Karpagam, Krishna Natarajan, Srikant. Never. The Srikant should not be audited. No. So you immediately write a letter with special notice, provided you are having enough capital in that company, write and say, you appoint anybody, man, not this. So that is also, you yourself select, my friend, please, you appoint him. Okay, not a problem. See, favoritism can work every way. Okay, so you send somebody. Now the point is, so two things are possible here. Special notice can be given for appointing a person other than the retiring auditor, or to expressly resolve that the retiring auditor shall not be reappointed. Now, my dear friends, under the Companies Act, only 4 situations are there. 4 situations are there when special notice is required. Entire Companies Act, you can search only 4 situations. One is here, 2 are here. 140 subsection 4, 2 are here. 2 will be in your final syllabus when you are studying on your own in self-driven module or whatever it is, self-paced module. When you are studying, you will come across that is for our directors. At the time of removal of directors topic, you will see removal of your director requires special notice. Similarly, appointing a person other than the retiring director, other than the removed director, that meeting requires a special notice. So if you want to remove a director, also special. That also requires a special notice. Okay, here remember, appointing a person other than the retiring auditor at an AGM. So it's only at an AGM that he will return. At the conclusion only he will move away. Before that, you have to want to appoint somebody else. So special notice is given by the members to the company. Special notice should be given by the requisite number of members, which is members holding not less than 1% of the total voting power, or members holding shares on which an aggregate sum of not less than 5 lakh rupees is paid up. Whichever is less. Though it is not there, if it is not there, it is whichever is less. So it should be sent by the members to the company not earlier than 3 months. So you can't send it too early also. So 3 months before the meeting, or at least 14 days before the date of the meeting. See, it is simple, sir. You double guess the share board of directors. You think that, okay, these guys are normally holding the meeting. Yeah. Somebody wants to say something? Yeah. You double guess the... Mr. Aditya has asked one question. I am not able to understand. What is by hat? Can we by hat? Seriously, I don't know what you're trying to say. Anyway, we'll take it up at the later stage because we have to cover the syllabus. Okay. Now, coming to the point. So, if you mean by heart, I will talk about it later. But let us see. Just confirm if it is by heart by putting yes, sir. Then I will tell you about by heart. But abhi to nahi, baad. After complete the topic, I will tell you. Okay. Now see, so special notice should be, so what happens? You are the members. You don't want the current auditor, you want somebody else. You know that the AGM will be invariably held sometime in August or September. So what do you do? You roughly calculate. So you send your notice in July. So that even if the meeting is held in July itself or June or maximum September, your notice will be well in time. So not earlier than 3 months, but at least 14 days before the meeting. Remember, AGM notice will be issued 21 clear days before the meeting. AGM notice will be held 21 clear days. And 21 days. So, service meeting in between 21 clear days. Now you have to deposit it 14 days before the meeting. Are able to see? You are getting it 21 clear days. Now you have to send your notice, that special notice, not less than 14 days before the date of the meeting at which the resolution is to be moved, exclusive of the day on which the notice is given and the day of the meeting. There is excluding date of service and date of meeting. Okay. Or you learned all this in your time. What is clear days? You know clearly. Okay. Now, once the company gets the notice, what they should do, at least 7 days before the meeting, they should give it members the notice. It should be served on the members. People understand. 21 days before you got it, 14 days before you gave the notice. Now the directors will give it within 7 days. It's a very short period. 7 days is too short. So they have. In those days, you have to post it. Therefore, the section reads like this, where it is not practicable. So they are using the word very carefully. Where it is not practicable, the notice may be published at least 7 days before the meeting, exclusive of the day of publication of. Instead of sending it to every member, you can have it published in 2 newspapers. See, in those days, postage was costlier than a newspaper advertisement. Therefore, this you given a newspaper, it is enough, provided you show that it is not practicable. Right, sir? But whatever it is, a notice has to be given. So, notice is sent 14 days before they send, 7 days before you send. 3 months before, if you receive it, no problem. You include in the notice itself, AGM notice itself, you include it. Suppose well before the notice of the meeting you are getting it, then you put it in the AGM notice itself. You say, A and B and Co is to be reappointed. We recommend that they be. In the meantime, certain members have sent a special notice, which is reproduced below, maybe taken up at this time. So usually what they will do, at the meeting, chairman, what you do, first he should take the appointment of person other than the retiring auditor. Right? Call for those in favor. Nobody will come. No. Against, nobody will raise. Okay, but still, see, it is not passed. Am I correct? They will be having some people who would be ready to say no, 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 no. Thereafter, you will take up the normal and appoint him and go. That's all. So that is how it should be done. Should be ensured that you have enough majority to defeat this motion first. Then go for your normal motion, where this fellows will vote against, no doubt. But their vote may not be of any sort. Which means what? Majority share. All this is based on voting only. Okay. So generally majority can decide it. I don't really see how this be so effective. I'm not able to see. Unless it is a tied company where, there are 2 groups, each holding say 40-40 with a 20% open, or one group, the controlling group 30, or 30 with other institutions, another 20, public 20. So 70 plus another 30 minority group. Now, if the 30 minority group is able to convince the public into the institution, they actually get a better, because these were only 40. Am I correct? Or 30. Institution 20, public 20. Out of 20, I get 10. Institution fully supported 30. I am having 30, 60. Easily I can defeat. So if that sort of power is there, only then you should attempt this type of games. Otherwise, if you are just going to be a minority of 5%, seriously don't go and waste your time there, is what I would suggest. Simple. See, all these are related topics, my dear friends. Extraordinary general meeting held by requisitionist, appointment of auditor, other than the retiring auditor. All this will be coming when you study operation and mismanagement. And that time only you will understand why these things are all there in the Companies Act. They are meant to support a majority which is oppressed by the minority, or a substantial minority which is this 140 subsection 4, what do they say? Special notice should be given for appointing a person other than the retiring auditor, or expressly resolving that the retiring auditor shall not be reappointed. So a special notice is required for appointing a person other than the retiring auditor, or expressly resolving that retiring auditor shall not be reappointed. Right? Whatever it is, you do that correctly. You send the notice to the members at least 7 days before meeting. Then you also send a copy to the retiring auditor, who shall be entitled to make representation in writing of reasonable length. You circulate it to the members if so required by the retiring auditor, unless the representation is received too late. Okay? And then, if it was received too late, the auditor can be allowed to read it at the meeting, have it read out at the meeting, without privilege to his right to be heard orally. See, when you are going to appoint a person other than the retiring auditor has an inalienable right to be present at the meeting and to be heard. See, again and again I'm telling, removal of an auditor before term of office, removal of an auditor at an AGM are all double-edged swords. When a duplicitous management, a management which does not have its credentials right, when there is a weakness, if they attempt this type of games, then the auditor will actually get a better chance to represent. It will become what could have been kept as a quiet matter, agreeing the qualification, you would have escaped. Rather, and maybe that would have been noticed by MCA, you go there, you explain whatever. If you fight this guy, he will get now a chance to talk. He will come to the shareholders meeting. And remember, that will become reported by the press. They're giving, if he is factually correct, and if he brings with him enough data to support his views. Remember, the meeting of the members of a company is called a quasi-judicial, it's called a absolute privilege, qualified privilege. It's called a qualified privilege occasion under the law of defamation. See, normally under law of torts, when somebody says something wrong, which is false or demeaning, you can sue that person for defamation. So suppose the auditor is coming to the company's meeting and saying your MD is a fraud. Now, he may be able to prove it. To an extent, he will have proof. But sometimes he might make a statement that cannot be immediately proved. Now, it is quite possible that the MD or directors can file a suit against him for defamation. But it is not mentioned here. The meeting of a company is called a qualified privilege occasion. The High Court or the Supreme Court or any court where I am a defendant, or the accused or defendant, when I say things in my own defense, okay, there is an absolute privilege. Means what? I can say things that are defamatory in nature, but in my own defense, to protect myself from something, I can say whatever I say may be reported widely, but it will not be, nobody can file a suit for defamation against me. See, why it was kept like that in the British law was because, see, a man fighting for his own freedom can be given a little leeway, is what they say. But again, it is the judge who is going to decide finally whether to give credit or not. Okay, anyway. So this is called absolute privilege. Similarly, the ministers, parliament, MPs, and the MLAs in legislative assemblies can tell many things in the well of parliament which may not be provable but defamatory. So in those cases also, they cannot be sued for defamation. There is also absolute privilege occasion. But an auditor addressing the members, the AGM, is enjoying only qualified privilege, not absolute privilege. Still, there is a privilege. He may say certain things to the members which are defamatory in nature, but he cannot be sued for it. But here it's called qualified privilege. Now, so he can't abuse it. He cannot abuse the occasion. Which is full of defamation. Then the aggrieved person, there is the directors or the MD, can approach the tribunal and say, sir, this fellow is only misusing the opportunity to, secure needless publicity to a defamatory matter. And if the tribunal is satisfied and passes an order, the representation need not be read out at the meeting. But still remember, he has got a right to be heard orally. The oral right to be heard orally, that is, right to speak at the meeting, is still available to him. But if he tries to do something like that in the meeting, chairman can control. Chairman can ask him to keep quiet. Chairman can say, thank you, Mr. Auditor, that's the end of it, sit down. If he refuses to do so, chairman can organize somebody to gently catch him and evict him from the meeting also. Chairman has so much power. If a member or the auditor or anybody is misbehaving in a meeting, chairman has absolute power to evict them. Of course, without causing any physical harm, politely push them out. And in cases of AGMs, being abused means misused. Sir, I'm giving somebody a privilege, sir. I can say things, sir, but it's okay. But he is using it only for telling bad things about the MD, vulgar language. He's a fraud. He's third-rated fellow. They keep on telling why. So you have proof means you tell. The MD took 1 crore from the bank without any explanation. When I asked what it is, he's not able to tell. No, MD might have an explanation. Whatever it is, I have the right to say that he is misusing the funds of the company. Now, this is not defamatory, but if you allowed to say this so that the members will know, oh, MD is misusing the funds like that. But if I'm going to use this opportunity to tell all sorts of bad things, it amounts to abuse. Use abuse. Okay, that's the point. See, I'll tell you, my dear friends, while it's a very interesting topic from a legal perspective, as a student of law, I love this topic. Qualified privilege, occasion, special notice, beautiful topic. But from a real life perspective, absolutely irrelevant, because in real life, I have 60 years, 40 years of practice down the line, I'm telling you, impossible. Invariably, what that MD will come is, he'll come and fall at my feet and say, Mr. Can you please resign? Some other person is taking a risk. Okay. I said, no problem. I will resign. So that once I resign, I will resign for personal reasons. I won't tell. See, if it is a technical point, see, recently in one of my cases, I'm not revealing any secret, I'm not telling the name of the client, but what happened, I told you, I think one of the directors had taken a loan in the books. So it is in the name of the company. One of the directors falsified board resolution, took it to a finance company, took a loan in the name of the company. I don't know how he did it. In this day of KYC and all, where even my own account I am unable to take money because of KYC, this fellow takes money and that NBFC so superbly transfers it to his personal account. Loan sanctioned to the company. A NBFC is transferring it to the personal account of the MD. It's one of the worst cases of mismanagement by the NBFC. Whatever it is, this comes to my knowledge only after 2025, he has done it. Now I'm auditing 2026. 2024, he has done it. Before March 24, I was not aware at that time. According to the other two directors, they were not also aware. Subsequently, in 2026, they become aware. Then they come to me. Then I tell them, this is a fraud. So initially, they were coming to me there was a fight between this fellow and that. So they thought I'll be a mediator like that. I said, look here, I'm an auditor. I cannot be the mediator. I have to sign the balance sheet. So for me, you, he, nobody is important. Company only is important. I am the auditor of the company, not of you or him or them. Okay? Therefore, whatever is the correct method for company audit, do it. Now, how are you going to disclose? That is when I told them, you reopen. Now that we have provision, you remember we studied it in accounts. You reopen. So they have one thing. Then I said, I will have to qualify my 26 accounts and say notes on accounts also. No, if not qualification, you have to highlight it I will not highlight it in the report that such a loan was taken and was not disclosed in 25, now being disclosed. I have to give the complete account and I have to disclose it as a fraud managed. And Taro also I have to report it. Fraud has been practiced by one of the directors. No, sir. That and all don't do, sir. That and all don't do. I said, how is it possible? You have not disclosed me. How are you going to bring it? They were talking to my humble view idiotically. So I kept saying, I said, look here, I will do this. Whether you like it or not. Now, what to do now? So they have only two options. Removing me. Nah. One at 141, not possible. Now, at an AGM, if they want to remove me, remember, no problem. But the balance should have been signed away by me with the qualification. So that also is not going to, 144 also is not going to help them. If they try to go for resignation, they are out because I was also going to qualify on other FEMA related issues. There were certain FEMA violations also. So I was going to report that also. So all this would have gone to the MCA. Why Srikanth is not signing the balance sheet, or why Srikanth is qualifying the. No MCA will have the guts, even the RD will have the guts to tell an auditor, you should not qualify. Okay. So for that reason, you cannot go to the RD. So it's a double-edged sword. Nobody will try to take 140 subsection 1 and 140 section 4 are both double-edged swords. Double-edged. Double-edged means when you think you are cutting somebody's throat, no, the other edge is there. No? That's why the smart swordsman, he will simply turn it and push it against your neck. That's end of story for you. So be very, very careful while invoking these two sections. Better not. Better not. Okay, is the only humble suggestion. Mr. Nityanand is the current auditor of Mrs. Delight Food Products Limited. He is retiring at the next AGM and he would be completing 2 terms since his first appointment. Company has a paid up capital shares have sent a special notice in accordance with section 115, proposing specifically that Mr. Nityanand shall not be reappointed. So they don't want to bother who is coming. They don't want Nityanand. Okay. Fine. Okay. Now the board complied with section 115. And at the next AGM, Mr. Nityanand was named. Instead, Mr. Brahmanand was appointed. Now Mr. Nityanand claims automatic reappointment under 139. Examine the validity of this argument. Sir, my suggestion, these type of technical questions, you please ask to the other, I don't know, if somebody is coordinating this meeting, I humbly request them to answer the question raised by the participant, which is not a subject related question. Technical question, please. Okay, coming back, why don't you answer the topic subject related question? That is more important. Why don't you ask? I am marked here as a co-host. Tech support is the host, and BOS ICAI is another co-host. Just for your information. I am only a co-host. Okay. Since you asked me, I'm telling. Whereas I would appreciate question in the subject. This time is very precious. Okay. So basically, Mr. Nityanand is wrong. He is not valid. His argument is not valid because just ensure that the special notice was given. See, this question has only one point here. It's all on one single point. Whether the number of members giving the notice is valid. Shares. So 10%, 50,000 shares, right? So members holding not less than 1%. Am I correct? Not less than 1%. So 1% of 50,000 is 500 shares. Whereas here 700 shares. Members holding 700 shares have sent it. Okay. So no problem, no issues. Okay. So, removal of not reappointing Mr. Nityanand is not wrong. It is valid. Mr. Sridhar Gopal Rao, your question, seriously, I'm not able to understand. How many days to receipt of application of fraudulent manner by auditor? So what is that question itself? I don't understand. Okay, seriously. Kindly reword it slightly so that I can understand it. What is your basic question, Phil? Now, here we come to different provision. This is very important. And this is good in the case of fraud, etc. But be careful. See, this again a repercussion of Satyam. See, these are all Satyam nijaks. Because in Satyam, such provisions were not there. The central government was finding its hands tied. Now, in this case, what they are doing, they are trying to make up for it by amending the law. Of auditor application, there is already told you, the notice should be sent not earlier than the notice should be sent not earlier than 3 months, but at least 14 days before the meeting. This is the time. Okay. Again, this is not necessary that it should be only fraud. It can be anything. Appointing an auditor, it's just you might don't want the existing auditor, you might want somebody else. No problem. Here you don't have to establish fraud and all. Whereas in this provision, you have to see the tribunal can take suo motu action. How? Suppose it is being appraised of some other matter. For example, it may be an IBBC matter, insolvency and bankruptcy court matter, IBBC issue. They find that when they're going through the IBBC matter, that resolution professional is coming and crying, he's saying, sir, this company has been totally handled. And you know something, sir, that auditor rascal, he's also signed balance sheets wrongly for the last 3 years. I'm feeling so upset. Oh, is it so? Okay. Let us invoke 145, suo motu. Even though nobody is making an application, they can do that. Yes. So the tribunal, see, while considering some other matter, unconnected matter, they find that the company has gone into insolvency. While doing so, they find that, of course, the director's action is there under the insolvency code itself. Action can be taken against them. Okay, but auditor, see, what for the auditor doing nonsense, this could not have maintained for 3-4 years fraudulent activities. Auditor was continuously helping them to falsify the balance sheets. Oh my God, like that. See, while I am proud of my profession, it cannot be denied that amongst the 1,000 who under our banners, there are some who out of greed do sign false balance sheets. So what to do? Okay. Luckily for us, the bulk of our profession are honest and honorable people. But there are, right? So it cannot be denied that there are fraudulent auditors. So you cannot say everybody. That will be a syllogistic fallacy. You can say some auditors are fraudulent, agreed. Whereas, unfortunately, the public and the investor community reverse it. They'll say all auditors are fraudulent. That is also stupid. Okay, so it should be statistically understood. How many cases are pending before the disciplinary committee? These are to see a proportion of total audits, total reports, reported cases. You can say about some percentage of members have done fraud like that. That's all it is. All auditors are fraudulent. All audit reports are unreliable. All financial statements are not reliable. That would be in my humble view, stupid approach. It is not the correct approach. Okay. So, tribunal can take action suo motu, or of course, on application by central government. Okay, where the central government on doing some investigation, it finds that the auditor has acted fraudulently, or on an application by any person concerned, a shareholder or a concerned director can apply. Now, when an application is received by CG, if tribunal is satisfied within 15 days of receipt of application, suo motu, no time limit. Application by person concerned, no time limit, they can even reject it. But if CG is giving immediately within 15 days of receipt of application, it shall order that he shall not function as auditor and CG may appoint another auditor. Straight away, they will keep his appointment out and somebody else. Okay. Then, of course, the judicial proceeding will continue. Okay. The tribunal should be satisfied that auditor has directly or indirectly acted in a fraudulent manner or abetted or colluded in any fraud by or in relation to the company or its directors or officers. Okay. Colluded means he has not committed the fraud, but he has assisted, he has helped, he has been part of the fraud. He has not done it. But while that fraud was happening, he has also been party to it. See, when Brahmaji and Vishnu were going to search for the head and feet of Lord Shiva, Brahmaji tried to go up, he couldn't go all the way up to the head. But so he came back and he said, fraud he did. You know what fraud? He said, I saw your Lord like that. He said, fraud. Now that fraud, Shiva asked, when flower was falling from the head of Shiva, that flower, Brahmaji told her, you tell that you saw me when I came up. So that flower, he told, yeah, Brahmaji was there. He saw the head and went. So that is called colluding. You understand? The flower was not committing fraud. Brahma was committing fraud. But flower was telling, yes, when he came up, I saw him. Okay. Now, so that flower is a collusion fraud. Similarly, when the director is trying to commit fraud, our friend the auditor is telling, yes, everything is correct like that. That is called collusion. So that shareholders believe that everything is correct because auditor has told. Such a senior auditor, senior person, he is telling it is correct. How can I PricewaterhouseCoopers? They are telling it correct. How can I say Satyam accounts are like that? We believe. That is called collusion. Okay. That is what happened in Satyam. So at that time, they didn't have this type of a provision for removal and all that. So they have to create a law for Satsang. For Satyam. Okay. That law became this law. Whatever they did at that time became this law. Then the tribunal will direct the company to change its auditors. Okay. The removed auditor shall not be eligible as appointed as auditor of any company for 5 years. And also he will be liable for action under section 447. Those of you who might remember 447 from prospectus, where there is a fraud, criminal fraud, 447 will apply. Where criminal criminal misstatement, 447, huge penalty, 10 times, all that. 10 lakhs, 15 lakhs, and all that, and imprisonment. In the case of a firm, the liability shall be of the firm and that of every partner or partners who acted in fraudulent manner or abetted or colluded in any fraud. Okay. Or in relation to the company or its directors or officers. Okay. Auditor includes firm of auditors. Okay. Later on, when we come to NAFRA and auditors, I think we saw that in NAFRA and auditors. There, when you come to offenses, we will see that. Where an offense is committed by a firm, where the partner is signing, both partner and firm are liable. Both partner and firm are liable. Okay. So in addition to this provision is without prejudice to any action under the provisions of this act or any other law for the time being enforced. Friends, this is very important because against the auditor, criminal complaint can be taken. Civil case can be filed there. Suppose somebody has relied on that audit report and lent money, the bank can take civil action. NAFRA complaint can be made. So many things can happen. For the sake of few crores or few lakhs of rupees, this auditor has lost his immortal soul as a human being. So what a shame. So be very, very careful. When something tempting you to do something illegal or wrong, remember the shame that happens when this is sent. So without prejudice means in addition to. So this is there, this provision here. Or you also have, in addition to this, you can take other actions also, like criminal action, civil liability, NAFRA complaints, so many things are possible. Okay. So we saw Satyanand, we saw Nityanand, we saw Brahmanand, now we are seeing Paramanand. So Paramanand, the auditor of, because when they had such a fraud, this fellow was in Paramanand. Now he has to go from Paramananda to total suffering. Okay. Mr. Paramanand, the auditor of Fly-by-Night Operators Limited, discovers that the director transfers. Now, when this happens, immediately he has to blow the whistle. He is the first point of protection for the shareholder. If that fellow colludes with the directors and issues a clean audit report, this is called collusion. Like that Tarambu, that flower which supported Brahma. So who is more fraudulent? The guy who did the fraud or the guy who supported the fraud? So for the year ended 31st March 2019. So you examine the legal consequences. My dear friends, this slide. Okay. Now, somebody was asking whether I should buy heart. No, my humble suggestion, don't buy heart anything. Read it once or twice and let it sink naturally inside. Another technique that I always suggest, and definitely Gen Z students may find it a little difficult to do because generally you do not like to write. See, one generation we wrote a lot. So we had writing practice. For us, writing was natural. Okay. Whereas today, you are not writing. Most of your work is done on computer, etc., etc. Whereas unfortunately, this paper or any paper for that matter in the CA exam is a written paper. We call it pen on paper examinations, UOP, pen on paper examinations. So that being the case, writing practice is needed. If you don't agree, don't agree. You are at liberty to do whatever you want. But strongly advise, see, you read the slide 3 times, go through the institute material, read the slide, sit quietly and try to recollect it, then write it in a notebook. Then take the material again, correct it. In case you've written it wrongly, use a reading pen. Use a reading pen and correct it. And you will find that you will never forget it. So don't buy heart, don't mug up. I will never encourage mugging up and by hearting because I'll tell you, I'm a psychologist also. I'm an MSc in psychology. I'll tell you, this is called short-term memory retention. Now, the brain does not retain short-term memory by hearting. No. It will, but that will be very short-lived. Okay, the synapse will immediately go away. That part of the brain will immediately get wiped out by other more important things in Tamil Nadu. Now, what is so important? You will forget because you are telling the brain what is more important by your excitement. If you are excited about company law, it will remember company law. If you are excited about IPL match result, it will remember only IPL match result. So, my suggestion, don't mug up. Rather read. Try to logically points, then recollect those points, then write, lick the then correct. Try this method. Don't immediately, hey, Buddha, he's talking all nonsense. Yeah, we are all Gen Z. There must be some other method of doing it. Maybe some AI-based method. But AI can give you the content, yeah, but who is going to remember it? So please, yes, AI is a great research tool. But what is there in the AI has to go into your brain. Now, for that, I'm telling the technique is read, understand, summarize in points, remember the points, recollect the points, and write. And then correct it from the content where you got it. Correct source. Whatever mistake you made, highlight it in red. Read it once more. That's all. Believe me, you'll remember it. Since somebody asked me about by hearting, assume it was about by hearting, I shall humbly suggest this method. You might ask me, how do you know? Who are you to tell me? Correct. I used it 36 times when I wrote my professional exams. This is the technique I used, okay, for my examinations. So, of course, I don't know if you are aware, I'm an all India rank holder in every exam that I ever wrote. Inter-final CAACS, 4 exams, and all India rank holder. Sorry, I'm not trying to boast. I'm only saying such a person is telling right. Two things will happen. One, your writing practice will improve. So in the exam hall, when you have to sit for 3 hours and write, it won't be a trial for you. It will be easy. In fact, I would even go to the extent of saying, take some side answers and write the answer fully, test it against the side answer. Writing practice. Why model exams? Model exam is only one opportunity. Where many people will come to us in those days, when you are coaching class and say, will you conduct model exam? Boss, one model exam, oh yeah, every day you can have model exam. Take one question, write it, check with the answer, see what you yourself be your own evaluator. Suddenly you will find you are able to understand what the institute is expecting, and your answer quality will improve over a period of time. These are all suggestions to you. Don't get angry with me for telling this because you're all well aware of everything. I'm just suggesting it to you. Okay. Okay. Now come to resignation. Resignation is also important area. Practically very important because this happens more number of times than the others. Okay. So, see, today, believe me, we as a profession also have become hyper. Now, when a client tries to push us, we tell them, boss, I cannot sign this. What I will do? Those days you used to arm twist me. Today, try to arm twist. I won't resign. I will qualify. Then you change me, but by then your damage is done. So that fellow also cannot remove us so easily. Earlier, they used to threaten us. Now that threat cannot be done. In worst case, we will say, boss, if you keep on threatening me, I will do something. I will resign. That will be even more dangerous for you. If you wait till the AGM, you can go through the process and put somebody else instead of me, no problem. But before that, if you keep arm twisting me and threatening me and all that, then I will resign. But at the time of resigning, I will find form ADT 3, where I will give a 3-page report on why I am resigning, giving all the facts to the central government and proceeding. So, from the date of resignation of auditor, within 30 days, the auditor has to file Form 83. Okay. Remember, one more thing. This one, on one side, this one. On the other side, board cannot quietly appoint somebody else in the place of the resigning auditor. You can appoint, then within 3 months, it has to be confirmed with the members. So many things are there. So resignation is not as easy as it was in those days. Right. Now, so in the case of government company, the auditor resigning should file with the CAG, the company, and the registrar. The CAG only appointed him, no? Company and registrar. Okay. In case of non-government company, other than government company, he had to file this ADT3 with the company and the registry. Okay. ADT3 is a powerful tool. I will say that the MCA has empowered us. Okay. In that case of fraudulent director, now the story continues. Those stupid other directors, they go to some other auditor, somebody, XYZ. She signs the balance sheet without sending a letter to me. Forget it. As of the day she is signing, I am the auditor of that company. Nobody else can sign that balance sheet. Unless I file a Form 83 and resign, nobody else can file. They sign it. It is uploaded in the income tax portal. And then this person sends me a mail saying, I have taken over this audit for your information. Please send the file Form 83. I said, what nonsense are you talking? Who are you to tell me to file 83? 83 is my volition. If I want to resign, resignation is my choice. I have not resigned. Okay. And I said, whatever you have done now is a professional misconduct. Okay. Because as per the code of ethics, when an auditor, see, suppose I'm not interested, and then I continue. In those situations, I will write to him or her or the firm saying, we have been appointed as auditors. Please express if you have any professional objections as to why we need to. It's a personal objection you might have. Professionally, you should have any objection. For example, like my case, there is a fraud here. There's a problem here. Therefore, don't sign, I can tell. Also, be careful. I can give a friendly monition. Also, my fees is pending. You being a fellow professional, collect the fees for me. Ask them to pay the fee to me. That is always a good reason. And immediately that auditor will inform the client, please pay the fee to him and come to me. This is one more thing. So why I'm giving you this elaborate inputs, maybe this will be useful in auditing also. So if you take up an audit without getting the consent of the other auditor, consent is obtained, then so we sent a clear hereby object to your action, which is professional misconduct like that. So giving you, but at that time I felt very bad. This is not the way it should be done. Between fellow professionals, there should be an amity. And there have been those cases, those days, there have been examples where one senior auditor, I still remember, I myself was not happy with the client and I was going to get out. At that time, the client approached the senior auditor and said, you take over the file. The senior auditor called me. He said, Srikanth, I was told that so-and-so firm wants to change to me. So no problem, I can take it up. But what is your view? He called me. Then I said, sir, it's like this. Then he gave me some suggestion. Why don't you do it? I was not happy. Because my thoughts were different. I politely said, no, sir. No, even now you tell me, if you want, I will ask him to reappoint you. You do it. See, that is the type of greatness of one generation above, the so-called baby boomer generation or Gen X. We were like that. We knew what we were doing. We had that professional awareness. Okay. Whereas next generation, what happened? They don't understand the ethics. Why that ethics is there? It is meant to protect us. They just want some client money like that. That is not a good practice. Client we can easily earn. Yeah. Reputation goes means everything gone. So be very, very careful. So if the auditor does not comply with the provisions relating to resignation, that means if he doesn't file ADT3, he'll be liable for 50,000 rupees or an amount which is equal, which is less. And in case of continuing failure, 500 rupees up to 2 lakh rupees. Okay. Earlier 5 lakh, now it is changed to 2 lakhs. Okay. This is for not filing ADT3. That's why whenever I resign, immediately I file ADT3. Okay. Remuneration can be fixed by the company in general meeting. In case of first auditor, the board will fix. Remuneration shall include facilities and expenses incurred for audit. So, see, you cannot, obviously, we have to come, we have to stay somewhere, conduct the audit, all that will be perfect. Remuneration shall exclude fees earned for any services offered at request of company. As I said, other than 144, certain services can be rendered. For example, tax or advisory services, etc., etc. Tax audit, all that can be done. Now, we run through this, powers of auditors, etc. Quickly we run through. Okay. So the auditor has always got the access to books of account and vouchers. Always. So, okay, at all times. In fact, the word used is at all times means anytime, not necessarily during business hours. Believe me, sometimes during the peak season of audit, we sit in the company till 11 o'clock, 12 o'clock. We are, one more thing today, everything is ERP based and online. So if I have decided that our team will work night shift, then we can always access through the net and work. So today we have work from home culture, work from anywhere culture and all. So we can do that. So that's why the word at all times is not wrong. Entitled to have necessary information and explanation. Okay. So friends, a set of books of account are produced to you. You're going through it, right? Certain entries are there in the books. You want to know what is the nature of this entry. So they give some vouchers and papers, etc. You see those vouchers. This expense is there. It says something business development. What is this business development? So they give some bill, stayed in Taj Grand Chola, like that. Agreed. Why did you stay? So that and all you don't ask that. You are producing bill na. It is Grand Chola na, business development. No. As the auditor may consider necessary for the performance of his duties as auditor. So, whether this is in the personal nature, whether it is in the business nature, I need to decide. For that, I need to know what this money was spent for. This is a power. You cannot take money from the public. Thereafter, with regard to the company's accounts, there is nothing private. Everything is public. As auditor, we can ask. Okay. Now, access to record of all its subsidiaries. See, holding company auditor can access the records of the subsidiary. Okay. For all its subsidiaries, insofar as it relates to the consolidation of its financial statement. So, you cannot conduct a fresh audit. Already subsidiary audit is over. Now you are taking those accounts, financial statement, when consolidating with your holding company, you are going to sign the holding company balance sheet. Therefore, to that extent, you are entitled to go through the books of account of the and records of the subsidiaries. Right, sir? This is frequently misused by holding company auditors, but generally they also do it only when there is no other option. See, when everything is clear in the notes and accounts of the subsidiary, they wouldn't generally poke their noses. But if it is not, then they have to form their own opinion. Therefore, they come. Subsidiary also, at least for the purpose of consolidation, you have to rework the balance sheet for Ind AS. For that purpose, definitely we'll need access to the records of the subsidiaries, right? Now, these are well known. You will be studying it in auditing also. That is why I'm going to rush through it. Now, what you should appreciate is 143 subsection 1 is an inquiry. What is an inquiry? You have to ask. The auditor shall inquire into the following matters. That's all. So you need not report on it. 143.1 does not figure anywhere in your report. So says I think it was 224.1a. Here now 143.1. So you have to ask. Okay, the idea is if you it could become a qualification, etc., etc. Okay, inquire. Seriously, I don't know why they have this inquiry, because there is no reporting requirement. You are not supposed to report it. If it's negative, also you need not report. But if it isn't, the idea is tomorrow, there are auditors. You are supposed to make an inquiry. So did you make that inquiry? So which is why audit documentation should speak. The documentation should have the inquiry and the response. In the client's confirmation that this is what it is correct. So that documentation only will speak tomorrow whether prejudicial state of affairs. Further, did you go and do further audit? And how have you taken it into account in your main reports? How did you do it? That is a question you have to answer before NAFRA or okay, so that is why you have to be very, very careful. Going forward, you have to be very careful in maintaining audit documentation, and we should also be transparent about our work. Not only the partner, but every audit employee, right down to the article clerk, should be well aware of what the audit is all about. That's the point. Whether loans and advances made by the company on the basis of security have been properly secured. Meaning, you are saying that you gave it against property document. Where is the property document? They can show me. Like that. Simply you can say, is it all secured? Yes. Auditor G, secured G. Okay, thank you. No. You have to see the security. Whether the security is in the possession of the company and whether the terms on which they have been made are prejudicial to the interest of the company or its members. So you have to establish that it is not prejudicial. Okay. These are loans and advances made by the company. Okay. Later on, when you come to final and you are studying company law on your own, you will come across loan to directors where it's prohibited. Other than that, okay, intercorporate loans. Whether transactions of the company which are represented merely by book entries are prejudicial to the interests of the company. See, this merely by book entries is very, very dangerous because many people, they think if they know double entry system, they can do anything. Still don't know. One of the directors of a company, not a finance guy, maybe BCom or something. There, of course, entrepreneurial family is MD, director. He's asking me, Mr. Shrikant, you tell me one thing. If at all I debit one account, is it correct or not to say I should credit another account? Because that is fundamental double entry. Yeah, what you're saying is correct. Exactly what I'm saying. You debit revaluation account and credit share capital. Means allot bonus shares out of revaluation reserve. Baba, it is not possible, Baba. You cannot do it, Baba. Like at the time, the Companies Act was not amended. This is the problem, the old law. Only institute guidelines. SEBI, of course, but SEBI I cannot use. I have to, the MCA, there is nothing. Okay. So I had to really fight. Okay. So these are all book entry. Whether they are prejudicial interests of the company, what can I do? So there are real dilemmas. Where the company not being an invest, because I am vehement about not using revaluation reserve for the company not being an investment company or a banking company, whether so much of the assets of the company as consists of shares, debentures, and other securities have been sold at a price less than that at which they were purchased. Three companies are exempted. Two companies are exempted: investment company, banking company. Both the banking company also will buy and sell shares. Investment company will buy, hold, and sell shares. Now, there they might sell it at a loss. They need not tell why. It's a part of their business. Sometimes you sell at a loss. It's your call. But when a company which is not investment or banking is holding be a valid reason, no problem. Otherwise, you take your next step into what you want to do. See, like this, there are a few. Whether loans and advances made by the company have been shown as deposits. See, loans and advances, deposits. So when you give a deposit, it's seen as a benign amount. Whereas when you give us loan or advance, it gives a, who am I given loan like that? Whereas I made a deposit like that. Oh, deposit, okay. Somehow that word deposit has got a, better color than loan. So you can't, loan is different, deposit is different. When you studied acceptance of deposit, maybe you would have learned the difference between loans and though, under the general definition, even a loan or advance is a deposit. Deposit definitions. Certain special category of loans and advances only are removed from the definition. But here they are saying if it is whether personal expenses have been charged to revenue account. Very important question. This will again come in CARO also. Okay, so you have to be very, very careful. There you have to very clearly say no. Also in income tax audit, you have to say. So many places you have to say. Personal expenses have not been charged to revenue account. Shares have been allotted for cash, whether cash has actually been received. And if no cash has actually been so received, whether the position stated in the account books and the balance sheet is correct, regular, and not misleading. It's a very beautiful thing where, on the one hand, they are saying cash has been received. On the other hand, they are saying expenses have been incurred. Now, if you look purely at the book entries, how will you be able to ever find out whether cash actually came or not? The only way you can do that is to one company. I can't name that company, but I'm talking about 1992, 91 or 92. It was a company. I don't want to go there. Okay, it's a confidential. But that company, they had foreign direct investment. In those days, first initial stages of FDI, there were the new norms had not come. It was all under the old law, where that particular industry was they allowed it. Government gave a specific permission for foreign investment to come. So about 4 crores came from the foreign investor. The local investor was supposed to bring 1 crore. Even that 1 crore, that fellow did not bring. You know what he did? Every day, cash will be entered, 50,000, 1 lakh, like that. Every day, some expenses will be returned. So, on the one hand, cash accounted to share capital. On the other hand, expenses accounted to cash. That's all. Book entry. They're saying cash. When we went through the expenses, only we realized that there's no bill. It's all bogus. So, because it was a big case, it went to tribunal. There was oppression and mismanagement action by the foreigner. At that time, we refused to sign the balance sheet. Then tribunal called us. And before tribunal, we said, how is it possible to sign? We can only give a disclaimer. Tribunal said, don't give a disclaimer, but rather give a qualified report. So I said, look here, sir, this will be the first report where everything is qualified. I gave CARO 14 qualifications. 14 qualifications, including this was also qualified. There was no cash actually received, like we are told. Okay. So believe me, though I'm not giving the names and all, it really happened. 1990s, those days, I was young. But so thereafter, I put a threshold on the type of audits I will take. And 2000 onwards, the audits that I take are all high quality audits. Otherwise, they won't. You may be big shot, you may be ultimate politician, ultimate cinema actor. I don't care. 100 auditors, you go to one of them. I don't want you. Because today you will come, you will be think great thing. Tomorrow, when the problem happens, I will be in deeper shit. Whereas today, peace of mind, hai na? Paramanand hai. Na? Nityanand hai, Paramanand hai. मेरा पास परमानंद है नित्यानंद है all that ananda will go when you go and audit such crooks and people who are of not worth. The auditor, while making the report, shall take into account, etc. Thank you, sir, for informing me that I have to take accounting and auditing standards, etc., into consideration. Definitely, sir, we will do that. Our students, including me, have passed an examination, very tough examination in auditing 2 times. So definitely, we will do all that. No problem. So basically, opinion is being given. It is an opinion. Very important. Okay. See, that is why whether a statutory auditor of a company's job can be converted to AI. Impossible. I'll tell you why. Assuming that the entire auditing institute material, all the standards, everything is read by one AI, that AI will be definitely far more intelligent than me in the procedure for auditing. If audit working papers are prepared by a team of people, non-chartered accountants, and it is fed into that AI can definitely compare the two, even raise intelligent questions and see whether the balance sheet is there. Finally, what the AI cannot do, and what only I can do or you can do when you become a member, is form an opinion. AI cannot form an opinion. AI is not a human being. Only a human being can have an opinion. It can express an opinion maybe, but it cannot form an opinion. I hope there's a difference between the two. Okay. So is it true or false is not an opinion. Okay. True or false is not an opinion. True or false, AI can tell. Correct, incorrect, AI can tell. 2 plus 2 equal to 4. True or false, AI can tell. Okay. But whether accounts reflect a true and fair view, it cannot form. Okay. Believe me when I say that. You might have given the example of, say, one. I was the one of the judges, another gentleman, very nice, intelligent gentleman, CEO of a tech company. He was also there. He was a judge. So what the gentleman did, he fed all the essays into an AI. It's not difficult. All over in electronic form only. He completely uploaded it. And he wrote a code also. Being a techie, he wrote a code for evaluating and all. I read all the essays. Stupid Buddha at the time, I read all the essays. Then I came out and I selected 3, 5, 8, and 11. He also selected, in his selection, 11 came first, 8 was there, 5 was nowhere. He came back to me and said, because I'm senior and I have some knowledge in essay writing. So he came to me and said, sir, what is this? Then I said, what do you do? Then I asked him, what were the rules that you gave for evaluation? He sent me 15 rules. Then I sent only 3 rules that I had followed. None of them were in those 15. Then he got a thing. He said, no, sir. With this rule, I will educate it. I will train the AI and we will see what happens. So he sent these rules into the thing, gave more weightage to this and sent it. Now the AI reads the whole thing and 5 comes on top. 5 comes on top. He was shocked and he came back to me and he said, sir, so let's come on top. See, so basically human being can form an opinion. Whereas AI is limited. It has its own limitations. I'm not trying to put down AI. AI has many benefits, agile benefits. But if a job is to be done by a human being and you give it to an AI, you are in deep shit. And at the end of the day, it will be a waste of effort also. Okay. Forming opinions, judgment, these are human characteristics. Rarely AI can. Because to calibrate an AI is so costly, it's better to have a human being there rather than AI. To make such an advanced AI, you have to spend so much. So human being can do it cheaper. Okay. So at the end of its financial year, so he has to say true and fair view. This true and fair view and all you will study in auditing. Also, he has to confirm whether he has sought and obtained all the information explanations. See, these are all confirmations given by the auditor. So tomorrow he cannot wriggle away. So you only said no, you obtained all the information. Then how can you say you are not aware? See that all this is dangerous. Whether in his opinion, proper books of account have been kept by the company and proper returns and all that is fairly. I don't have to waste my time on this. Whether the company's balance sheet and are in agreement with the books of account and returns. Whether in his opinion, the financial statements comply with the accounting standards. Observations or comments of the auditors on financial transactions which have any adverse effect. So, qualifications. Whether any director is disqualified from being appointed as a director under subsection 2. Friends, this is given here because, see, every year when we audit, we have to check up whether directors are disqualified. See, 164.2, you will study it in final. It's not in your syllabus. Under 164.2, if a company has not filed its annual returns for 3 consecutive financial years, or not repaid its deposits, or redeemed its debentures, etc., and 1 year has elapsed, etc. There's a lot of 164.2 has certain conditions. Now, for this company, we have to see whether this company has filed its annual return, whether this company is default, etc. If it is not in default, if it is filed correctly, then we can say no director is disqualified. But if that has happened here, then we will qualify here saying directors of the company are disqualified. Like that. So this is a good thing. So every year, we will tell, look here, please ensure, see, and it is only 3 consecutive financial years. Suppose 3 years have not been filed. We are auditing now the 4th year. We will tell them, Baba, 2 and 3 you leave. You go and close form. 1 at least you file now. So the 3 consecutive years won't be there. Or you do 3, 1 and 2 let it go. Put pickle. Keep it in the pickle jar and we will see what happens later on when it will be a huge amount. Or if you are lucky, MCA will come out with some kind of an amnesty scheme. Go in that scheme and finish it. Any qualification, reservation, or adverse remark relating to the maintenance of account, etc. Whether company has adequate internal financial controls with reference to financial statements in place and the operating effectiveness of such controls. Such other matters as may be prescribed, etc., etc. The such other matters as may be prescribed is your CARO. One of the matters which was prescribed is CARO, Companies Auditors Report Order. In 2020, I think was the last one. They keep amending it. Not relevant from exam point. With reference to financial statements was introduced in 2014. So financial years commencing on or after 2015, the report of the auditor shall state about existence. But you may voluntarily include for 2014 also if you want. Insert this question well in time. Prejudicial means adverse or against. So prejudicial to the interest of the company means prejudice means something that is unfavorable. So against the interest of the company. So you don't like the word prejudicial to the interest of the company, Mr. Enam, don't bother. You just use against. So anything that is against the interest of the company, prejudicial to the interest of the company. Okay. One I, 143.3 I only, brothers. Only this. Okay, only this is exempted private company. If it is an OPC or a small company, if it has turnover less than 50 crore, total borrowings from banks or financial institution or body corporate is less than throughout the year, it should be less than 25 crores. If so, then I will not apply. That is all. I will not apply. Okay, sir? See, from the exam point of view, all this is this relevant? I will say no. But since it's an elaborate coverage, you have to cover everything I'm covering. Rules 2014. Under that also, Rule 11, they have given some more things to be seen. For example, impact of pending litigations on the financial position. Anyway, for contingent liability, we will see it. See, anyway, as part of Schedule 3, I have to report contingent liability off balance sheet. I will definitely see pending litigation. They are worried whether you see the auditors, they may not know. Therefore, like he's saying, please study. Okay, sir, I will do it. Has made provision as required under any law for account or accounting standard for material foreseeable losses, if any, on long-term contracts, including derivative contracts. See, a derivative contract will have a strike date. But before the strike date itself, that contract might be out of the money, which could be foreseeable. Okay, there is a chance of recovery may not be there. You went short, and the day you went short, the charge started going up. The day you went long, the charge started going down. Okay, I mean, at least for me, that's why I never do trading. I never do intraday trading. I never do trade. I only do value investing. I buy at prices never go. And in between, I make a huge profit over, say, 7 years or 6 years I do. Okay, so this is how I make money. In this intraday, I don't do, because the minute I buy Dubakur Limited will start going down. The minute I go short on Prosperous Limited will start going up. Amounts required to be transferred to the IEPF by the company. See, related to dividend, under that, what did we say? For 30 days, pay the dividend. Within 7 days, transfer to separate account. And after that, 7 years, you have to be there. And thereafter, you have to transfer it to the IEPF now. So every year, you have to find out from the company, did you declare dividend? Was it transferred? Ask them for a chart from at least go back 8 years. Got me, but 7 years now, and see whether anything is pending, or preferably ask for a lifetime chart. You give me your dividend history, man. From formation, at least 20 years that history you give me, and let me see if any IEPF is pending, and why you have transferred. If you have transferred, give me a chart, and I will verify it with the records, pick it, put it in my audit working paper, and confirm the company has transferred to IEPF. Has provided, see, this is SBN, yeah, I'm not even going to bother, yeah. This is part of demonetization. At that time, in that year, they wanted us to mention SBN notes and all that. Very funny, this thing. So, not relevant. Now, we can easily complete it today, inshallah. Now, what I suggest is we'll have a small break for about 10 minutes. Right? Small break. Okay? Sir, small break, sir. So, welcome back from your well-deserved break. Moving on. Every auditor shall comply with the auditing standards. It's very important. Friends, that is why when you're studying auditing paper, remember a lot of importance we give to auditing, SAP, standard auditing practices. So why? Because it is statutory also. Of course, ICAI is given. Therefore, as our alma mater, we have to obey. Plus, it is also statutory. If you want to audit a company, government may prescribe the standards of auditing or any addendum thereto as recommended by the ICAI in consultation with and for examination of the recommendations made by the NFA, right? So, other provided that until any auditing standards are notified, any standard or standards of auditing specified by the ICAI shall be deemed to be the auditing standards. Okay. Certain additional matters to be reported. As you are aware, COL has been introduced. That I don't want to waste your time. In addition to the main audit report, COL also has to be given. This COL has been frequently amended and extended. The last time, to my knowledge, it was done was 2020, COL 2020. Okay, some additional questions and all that. It's not very important. COL, but auditing paper, very, very important. Every line of COL should be known, every question should be answered, etc., etc. Now, we come to another interesting area. Again, it is a knee-jerk reaction of Satyam computer case. But for Satyam, I don't think these provisions will ever have come into this law. See, to understand this section, a little judicial background we will go. Long, long ago, in a case law, British case called Kingston Cotton Mills case. Kingston Cotton Mills case. A very great decision, very important sentence was told, which is frequently quoted when talking about auditors. So, wherein in Kingston Cotton Mills case, it was very clearly held that an auditor is a bloodhound and not a watch. An auditor is a watchdog and not a bloodhound. Means his job is to go and audit the company. He need not be looking out for a fraud. He's not a bloodhound. He's not a Sherlock Holmes or a Hercule Poirot. He has to find out the crime. No. He can presume that things are normal. Everything is correct, given to audit and go. In other words, he is not liable if there is a fraud. That was Kingston Cotton Mills case. If only that was the law today, Satyam computer case, the auditors would not have been affected at all. But no. Post that, there has been a huge change in the thinking. Especially Lord Denning has very clearly opined in 2 or 3 cases that a very famous judge, Lord Denning, has said, auditors' liability is now not only to the shareholders. Auditor owes a liability to third parties also. Every person who would rely on the financial statement and thereby might have suffered a loss can claim from the auditor. So such judicial, of course, these are all British cases. In India, we do not have a similar judicial precedent. But by and large, post Satyam, the Indian auditing the books of a company, you find that there is a possibility of a fraud. No, you cannot quietly, close up that area, come away as if nothing happened and help them. No. Once you discover a fraud, this is what Denning said. He said, look here, you need not go hunting for a fraud. But if you do discover a fraud, or even the chance that there is a fraud, you shall not fail to investigate. You shall not fail to go deeper. Okay. See, that is the expertise that our profession has given us. And that expertise should be applied. Okay. See, if you feel that the verification of this would take more energy, then immediately you come back. See, that is what they are saying here. Notwithstanding anything contained in this section, if an auditor of a company, in the course of the performance of the duties as auditor, has reason to believe that an offense involving fraud, which involves or is expected to involve individually an amount of rupees 1 crore or above. So what happens less than 1 crore, we'll see. 1 crore or above is being or has been committed against the company by officers or employees of the company, he shall immediately report the matter to the central government. So the idea is simply, you feel that there is a fraud now. You feel that there is an offense involving fraud there. You have, obviously might have some proof. Just like that, accusation. It's easy, sir. Forensic audit is seen as some sort of a great discipline now. It is basically ability to see something anomalous. The beauty is a well-laid fraud with all documentation now will be difficult to find out by a normal audit. But once your suspicions are aroused and you start poking there, the house of cards will fall. Seriously, I've done it many times where suddenly, see, this instinctive also. We go there and say, something is wrong here, man. It's not correct, yeah. You take up this vouchers, you do that, and then you take an Excel and you do an analysis, compare the two, and tell me what is what. Then suddenly the anomaly comes. These three vendors are constantly giving bills. All other vendors normal. These three vendors alone happening like this. Immediately zero in on those three vendors. How were they selected? Who are they? Are they related parties? Is there something else happening there? Okay, they are not related. Then I can go and next step I will do is I will ask the vendor to confirm balances. Yes, with certain limits. Here my power stops. I cannot go and actually visit. But if it's a forensic audit, I can do that. I can go there, and if I have suspicion that I can ask him to come for an interview to the client's office and say, ask him certain questions, put certain things to him, take a sworn statement, and I can show certain vouchers and I can show certain bills and say, look here, these are not, whose handwriting are these? Did you write, did you sign it? Or did the directors themselves sign and put it in the voucher film? Something. Then where is the money that you got? What happened to it? How did you pay it? Like that. I mean, so forensic audit is ultimate. But even without that, my dear friends, you can start the process. See, suspicious. These are all there. Therefore, we feel. Then you give the matter to central government and you go away. After that, central government got problem. Suppose it is less than 1 crore, then the auditor should report the matter to the audit committee. But here there is a conundrum or a dilemma. We'll come to that a little later. First of all, let us look at 1 crore and above. Auditor should report to the board within 2 days of his knowledge, seeking reply or observations within 45 days. So first step, you report to the board. Give them an opportunity to give replies. Again, it's audi alteram partem. When you are rushing to report to the central government, pause. Ask him. Okay? And within 45 days. Now they have to give you a reply. But by then, your relationship with the company would have been damaged. If it is a director-related fraud, that too MD is aware of it, you are out. That is when all that, removing all that will start. Okay. Of course, that they may not, because now then you have that will be giving more power to you. Because the central government, you will tell the central government, Baba, you only told Satyam, Satyam, Satyam. Now under 143 told, I have sent a reply to message to you. Now these fellows are removing me. You tell me which is, now do you understand what's happening here? So central, if the RT is halfway intelligent, they will understand. Oh, correct. You are complaining about them, therefore they are doing. Wow. So that's how it is. Okay, so that's not the way to go. Friends, with this type of stringent provisions, corporate fraud should stop. But most of the time I find all these fraudulent misstatements, all these jiggery is happening only in startup companies, because they only are mess, complete mess, because they are people who are not fit to manage companies. They think they have an idea which will grow. They think they'll get valuations. For that, they will do all sorts of nonsense. Their greed is coupled with their ignorance. They think that they have technical something, but nothing. Okay. And I have found so many startups. I'm not joking. You take a step. If you don't accept what I'm saying, take statistics of how many startup companies are there and how many have even reasonably shown profit in the first 5 years and how many have become unicorn. You will see a slowly petering out triangle only there, with the bulk of the useless companies at the bottom not having any reason to exist. Okay. So I think this whole startup thing has to be reviewed before it goes out of proportion. Luckily, the public are not involved in startups. Luckily, it's some equally stupid funders who are doing it, angeling, because they are also greedy. You see, it's all greedy. Like that, it's greedy leading the greedy. Everybody is greedy in that hierarchy, from the promoter right up to the first level funder, second level. Make money without any base. Okay, not understanding how money is actually made in the long run. They're all greedy people. Anyway, so of course the view express is my view. I'm not saying startup per se is wrong. So out of all this garbage, there are one or two treasured gems, but for that, most of it is garbage. Though that guy who has a real idea, no, he will not go for funding. He will somehow working in the garage, he will create. And he will do it so well that people will beg him to become part of his company. So those are the real values. Okay, not the guys, the day they start the company itself, they'll ask, Mr. Srikanth, when do you think we'll get funding? How much do you think we'll get like that? These are the fellows who are going to fail. Whereas the guy who's got an idea sitting in his garage, working hard, coming to me and asking, sir, can you get 10 lakhs, sir? That's all I need. That fellow is going to become the next unicorn, 100%. So, right. Now coming back to our concept of fraud. Auditor shall report to board within 2 days of his knowledge, seeking reply. Now reply is given. Then along with the reply, you will send to the central government your comment within 15 days. Do you see the time bound again? Easy to remember now. Discovery of fraud, 2 days, send a report, asking for reply within 45 days, receipt of reply, within 15 days, send it to the central government. If you don't receive, the wait for 45 days and send your report to the central government. With that, your duty as an auditor is over. Okay, how to do it? Send it in a sealed cover with AD, registered post acknowledgement due, or by speed post. Keep a copy, proof that you sent it. And also send an email in confirmation of the same. The report shall be on letterhead of auditor and be signed by the auditor with his seal and shall indicate his membership number. Okay. The report shall be in the form of a statement as specified in Form ADT 4. Okay. So you can remember ADT 2, ADT 3, ADT 4. ADT 2, application to central government for removal of auditor. ADT 3, resignation by auditor. ADT 4, fraud, reporting of fraud by auditor. See, like this, instead of mugging up or by-hearting, when you're sitting quietly, try to recall, write it. Or recall, write, verify, recall, write, verify, recall. Your brain, then the synapses will get strongly bound and your short-term memory will be improved. This is how short-term memory is improved. No other way, not by mugging up. Okay, only the salient points. Don't mug up the entire material and all. No. That is wrong. Okay, only create points. See, my PowerPoints are all points. At least remember that. Okay, that's all we are asking. Not to mug up and by heart. Believe me, my dear friends, you have to believe me, because from 2020, to my knowledge, thousands of students have attended my classes. I have told them law is an easy subject. Do not get frightened by the content. Convert it into easily digestible small chunks, which I have done in the PowerPoint. Read it with understanding. Try to recall it. Write it. That's it. Go to the exam and get not less than 60. This is simple. If you're still going to confuse yourself, God bless you. Okay? If you're still going to get confused, God bless you. It is very simple method. There is nothing, no need. It's not that you have to be brilliant to get more than 60 in any subject in CA. Forget law, any subject. You need to understand the subject, core of what it is, and apply it. Instead of mugging up without understanding the depth of it. Okay, so in case of thing, you have to report the nature of fraud, approximate amount involved in the parties. And it should also be disclosed in the board's report. Okay, so that it becomes public information. And of course, if it is a fraud, you also will have to report in Caro. It's going to be a real mess. Now, see, only one thing. Normally, in the case of auditors, now, we are not supposed to disclose confidential information. See, even when I gave a case study example of misbehavior in auditor by an auditor, I cannot name the company, everything. I can give as a hypothetical or as a case study, but should not disclose the confidential information. You have to maintain confidentiality of the client's identity as also the accounts. Whatever is known to us in a professional capacity cannot be told to anybody except statutory authorities when they are asking for it and within the framework of a statute. Simply, if I'm getting a mail from somebody's government department saying, give it to me, no. Under which section you're asking? Which section of the law is empowering you? Under that section, I will give. Simply, I am the so-and-so big panjandram of Chinese, of India. Therefore, you send it to me. Sorry, brother. Name, section, rule, you tell, subclass, I will send it. Sorry, this is a constitutional right. If you try to overcome it and force me, sorry, I have the remedy of a writ jurisdiction of the jurisdictional High Court or Supreme Court as the case may be. Stricture will be passed against the officer for misusing the... See, anything that an officer of the government, an executive man has to do, has to come from within the framework of that statute. Within that framework, section, rule, you have to quote. Then only your action can be taken. It's very important. Later on, if you're going to specialize in income tax, GST and all, remember this. Just like that, you cannot say, I am government officer, therefore you have to do it. Yes, boss, you're government officer, I salute you. But your power comes from the law. So quote the law when you're talking to me. Don't quote your rank. Okay, so normally auditors are bound, and this statement I will tell you, I have made this statement to many senior IAS and IRS officers who have smiled and said, Srikanji, you are absolutely right. Because they are people who are gentlemen. They know. So it is only the low-level fellow who doesn't understand his reality of his appointment by the President of India who will misuse his position. The people who know the power. See, remember, these IRS and IAS officers, or every one of the Indian services, are appointed by the President of India. They do not report to the Prime Minister. Sorry to say this. They are appointed by the President of India. And the resignation will be submitted only to the President of India. They can be removed only by the President of India. So no minister can come and threaten them. You know who I am, like that? No. Whoever you are, this is a law. And the law applies equally to the minister as it does to the ordinary citizen like me. Okay, that is the beauty and greatness of living in the democratic country that was created by Dr. Ambedkar. Never forget that. Okay, we are not living in some Rajya where, Raja is there. We are living in a democratic country where every man is equal and every man has the protection of the Constitution. So, where an auditor reports a fraud in good faith in accordance with subsection 12, he shall not be regarded as having contravened any duty to which he or it is subject. So, when I'm doing it in good faith, even then it's better to take clause there at the time saying this is being done purely in compliance with 143.13 with regard to that, like that. Better to put it. Audit of government companies is a special case. In addition to the normal rules, everything applied to non-government company will apply to government company also. In addition to that, the CAG will play a major role here. We saw the appointment of this government company auditor is by CAG. We saw elaborate provisions. Once the CAG appoints, at the time of appointments, they will give further directions as to the manner in which the accounts of the company are to be audited. The manner in which. So, in addition to the standard auditing practices, the CAG may also ask the company to report for that. And the auditor will also submit a copy of the audit report to the CAG. So, definitely, the audit report is addressed to the shareholders who are basically central government, state government, etc., etc. In addition to that, a copy of the audit report will go to the controller and auditor general, who will scrutinize it and may give further comments also. This is called comments. So the audit should include the following: directions issued by the CAG also you have to comply and give reply. Action taken thereon and its impact on the accounts and financial statement of the company, right? So the CAG will also go through it. He can conduct a supplementary audit. Once the main statutory audit is over, the report is given, it will be sent to the financial statement, etc., will be sent to the company, to the CAG. The CAG may, please note it, Your Honor, he has the right to conduct, but he need not. He may conduct a supplementary audit by such person or persons, and means he will send a few of his employees to do, depends on the size, who will then give comment. Usually it will be no comments. So whenever the audit published a comment, it's a great celebration. When the CFO will call us and he'll say, sir, we have received a CAG clearance, sir, no comments, like that. It means that clean, your audit is over. That's actually sort of pat on the back. Sort of Okay. Any comments given by the CAG upon or supplement to the audit report shall be sent by the company. So, in addition to the auditor's report, the supplementary comments also will be given. Invariably, these supplementary comments will be related to presentation of the financial statement, mainly with respect to accounting standards, which is why when you're auditing a government company, please ensure total compliance with applicable accounting standards. Government company may also conduct a test audit to be conducted. In the case of certain larger public sector undertakings or government companies, there will be a permanently placed team of CAG auditors doing a test audit on a continuous basis. Okay, it's more of an internal check, right? So this is audit of government companies. In terms of branch. Now remember, my dear friends, statutory auditor can jolly well visit a branch. Okay, so the branch accounts can be audited by the company's auditor. But if there are numerous branches or the branches are in another location, then they may have branch auditors. Any other person qualified for appointment as an auditor of the company under Section 139. So, for example, there is a Singapore branch. No. Much as I would wish to visit Singapore, the company may say, Mr. Srikanth, please don't mistake me. We will have a local auditor to do it. Branch audit. Is that okay? Chalo, I do accept what to do. Okay. But that person should be qualified for appointment, meaning he should be a chartered accountant or equivalent qualification in Singapore. Only such person can audit the branch. But overall responsibility is statutory auditor. Therefore, at any cost, if I'm having my own doubts, and I say I want to go, the statutory auditor can go to the branch also. You cannot deny him that right. Because ultimately, I'm going to take all that into mind. So I'm going to rely on the branch auditor's report for my final sign. If the branch office is situated in a country outside India, the account shall be audited either by the company's auditor. Note it, your honors. Company's auditor can always go there and audit it under the Indian Companies Act. See, you might say it's a Singapore branch, Singapore law. No, Singapore law, it's a branch of an Indian company. But to save time, I can use another accountant who is locally qualified to act as an auditor of the accounts. Okay. So it depends. For example, you take large banks, they will have main central statutory auditors, 4 of them. We already saw joint auditors, 4 of them. Now, in addition to that, they'll be having for certain selected branches, having deposits or advances more than a certain limit, they'll be having branch auditors. So these branch auditors will audit the branch based on the instructions given by the statutory auditors. Okay, of course, in compliance with the Companies Act, all the provisions we saw for regular auditor will apply to the branch audit with regard to the branch. So the duties and powers of the company's auditor with reference to the audit of branch shall be as contained in 1 to 4 of section 143. Same, right? The branch auditor shall prepare a report on the accounts of the branch examined by him and send it to the auditor of the company. Noted, your honors. Statutory auditor reports to the shareholders. Branch auditor sends his report to the statutory auditor, not to the board. Got it? Of course, the company only appoints him. Okay. But he doesn't report to the shareholders. He sends his report to the statutory auditor, who will go through it and shall deal with it in his report in such manner as he considers necessary. This is what we confirmed. Do you remember? One of the confirmations we gave here was whether the report or the accounts of any branch office of the company audited other than the company's auditor has been sent to him and he has dealt with it in preparing his report. Here in his main audit report, he has to say, we have received all the reports from the branch auditors. We have gone through them and we have dealt with them. Okay. For one bank, when I was the branch auditor of a large branch, there were certain issues. So I said, I qualified in branch. I put a thing that was subsequently ignored by the statutory auditors. Sorry to say this. Later on, that bank went into deep trouble. The MD was arrested by CBI and all. And at that time, those statutory auditors were debarred. But the branch auditors, our audit continued for 4 years. Only 5 years I was auditor for that bank because that 1 year we suffered. The various officers of the branch at various levels used to behave high-handedly with us. In fact, one zonal manager even threatened me and said, Sashikant, I'll see to it that you'll never enter this bank again. I said, look here, Baba, becoming an auditor of your bank is neither in your hands or anybody's hands except the RBI. And I'm in that panel. If they don't want, they don't want. I have no problem. But you cannot decide whether I can be the auditor or not. Okay. Such threats have also come from people. Later on, that zonal manager was suspended and shamed, and he was removed from the office for information. So, just to give you background, see, you'll understand this only if I put it in context. 68-year-old man is telling you this all happened in 95 and 96 when I was young. A zonal manager called me for a meeting in Taj Coromandel in Chennai and he said, Sashikant, you want drink? I said, I don't drink. Okay. What is it? You are a young man. I can help you. Here's a blank sanction letter. Take it. And you go to any client of yours or anybody. Fill up the name. I'm giving it 20 crores straight away. Fill up. Take 2% from that fellow. I can't give you a break, but here's an opportunity. Take it. I said, what are you talking, sir? Please don't waste my time. I walked away from that meeting. Then he called me to his cabin and he shouted at me and he threatened me because I was going to make a provision of a huge amount, which was under the norms, it was valid. He wanted me to not do it. I said, if I don't do it tomorrow, I'll be in deep shit, yeah. So then I did it and I sent it to the Central Statutory Audit. I don't know what happened after that. I assume that it was ignored in the bigger picture. Thereafter, those statutory auditors were need to exist. Central Statutory Auditors are debarred. Okay. So, and just telling this to you to inspire you as youngsters, don't ever think that doing fraud is good or it's something great. It is one of the worst things. Don't ever think of supporting fraudulent directors or forget that is statutory audit. Yeah. You all will become CFO and big shots in big companies. Now, be careful. Then only the danger is greater. Because as a statutory auditor, I can throw off everything, go for sannyas, nothing can be done to me. You are bound. That salary, the car, bangla, everything will go. So for that, what you will not do. So be very, very careful before accepting employment with the company. Study the promoters, whether they are ethical people. Study who is the statutory auditor, whether that man is a good man. Then you join, rather than get into trouble with fraudulent directors and fraudulent auditors. They will pull you also into that. Okay, so be careful. And thereafter, the industry will shun you. See, once you are auditor for a company that's had criminal action, if you're an employee, CFO and all, when your biodata keeps going, you have to include that. See, it will always be a stigma until you clean yourself. By then, you have to come down to a lower level job only. It's a big mess. Don't go there. Why? So don't think that this is a dilemma only for practicing CAs. It is a dilemma for every CA. So, branch office is there. Branch auditor should be fair. Why I give these examples? Because in my own life, I have faced such pressures. And we have come out of it. It's not that we have not faced any pressures. And we have taken the decisions that have made us what we are today. Instead of succumbing to the greed and the threats of these people. So, the provision of this section shall mutatis mutandis apply to a cost auditor. Mutatis mutandis means with such changes as may be applicable. See, we can't apply directly all these provisions to cost auditor and secretarial auditor. Because many of the things pertain to financial audit only. So those will not be applicable. But provisions relating to, appointment, the way of appointment, all that will apply to cost auditor and secretarial auditor. Okay. Entire 143 will apply to cost auditor and secretarial auditor. See, it's a huge section now. Total 14 subsections are there. Okay. In case any auditor, cost accountant, or company secretary in practice does not comply with the provisions of subsection 12, in case of a listed company, shall be liable to a penalty of 5 lakh rupees. In case of any other company, 1 lakh rupees. Okay. So some amendments have been there. 2020, there was a major amendment to the penal provisions by which there was a decriminalization of the Companies Act. Also, the penalties were somewhat toned down by that act. Auditors to sign audit reports, etc. Okay. Person appointed as an auditor should sign the auditor's report and every other document in accordance with the provisions. In case of the firm including LLP, only chartered accountants or authorized actors, statutory auditors and sign. Okay. See, under the Companies Act, they have no problem. Multiple professionals becoming members of an LLP. They have no problem. But institute is yet to come out with complete approval of such behavior. Yeah. So as of now, it's better not to go there. Though it's a good idea. Actually, my daughter is a company secretary. My son is an advocate. Okay. So if you can have one LLP, all professionals will be there in that. And we can give all the services in one place. It's okay. But now, as of now, not fully permitted by the institute. Guidelines are yet to be prescribed for now. The qualifications, observations, or comments on financial transactions or matters which have any adverse effect on the functioning of the company shall be read before the company in general meeting and shall be open to inspection by any member of the company. The idea is you can't simply give it, you read it, he won't even bother to read, he won't even open. Forget paper. If you go to send PDF, many of these people are investors, they're all 60 plus retired gentlemen. They don't know how to open file also. How they will read? They only know one thing, go to the market, buy, end of the day, sell, make money, lose money, come. That's all they know. The auditor shall be entitled to receive all notices of and other communications relating to, note it, your honors, any general meeting. So, you cannot, the company secretary or somebody cannot say, Sir Auditor, you are only auditing financial statement. Auditing, that is only AGM subject. So, I will only give notice of AGM. If a secretary says he will be wrong. Every notice of general meeting, auditor is entitled. He can attend also. But auditor shall, that shall is very, very important, unless otherwise exempted by the company, attend either by himself or through his authorized representative, who shall also be qualified to be an auditor, any general meeting. So, they are saying everything, every general meeting he has to attend. Shall. But of course, he can be exempted. So most of the time, when I get a notice now, they have to send a notice. The minute I get the notice from a client, I immediately send a reply saying, non-available out of station, I may be excused. And then I'll tell the company secretary to send a return mail saying, we have received your mail and we have no objection to your not attending. But if sometimes what the MD will call me and say, Srikanth, the problems are there, you have to come, I'll cancel my appointment and I will go there and sit with him, holding his hand, don't worry. If any queries are coming, I will tell him what to answer also. In the meantime, the company secretary will be literally frightened. He will not know, sir, what to do, sir, what to do. Wait, what he is going to ask, let us see. Maybe we can have a reply. Usually the question will be a very simple question. Give a fair answer, that's all. For all, you have decided to take other people's money and do business. We are accountable to them. Sit and answer rather than become frightened. The auditor shall have right to be heard at such meeting on any part of the business which concerns him as auditor. See, my dear friends, this is applicable to all general meetings, right? All general meetings he can go. But he can be heard only on matters relating to finance or accounting. Punishment for contravention by the company is under any section 139 to 146. 139 to 146. Any section, contravention, company fine 25,000 to 5 lakh, officers fine 10,000 to 1 lakh. Okay. So that imprisonment has been deleted. Okay. Now 147.2 is an elaborate section giving punishment to the auditor. Not for convening 139 to 146, but specifically 139, 144. Taking up an audit that is prohibited, work that is prohibited, 140, all that. But if he does it unknowingly, then fine is 25,000 to 5 lakh or 4 times the remuneration. Unknowingly also punishment is there. Same thing. So I did unknown. How you do unknowing? You are a member of the institute. In intermediate, they can't taught you 147.2. How can you say unknowingly? How can you say unknowingly? I mean, as a member, you are expected to know. You're shame if you say unknowingly. If you say unknowingly, then 25,000 to 5 lakhs. Knowingly or willfully, then imprisonment up to 1 year. Knowingly you're doing it. You are aware that 144 is there. You are not supposed to do this work. Knowingly you're doing it. Then imprisonment up to 1 year, fine rupees 50,000 to 55 lakhs or 8 times the remuneration. Suppose you charge that company 40 lakhs, then 3.2 crores, 8 times you have to pay. Am I correct? 8 into 4, no? 32, 3.2 crores you have to pay. In addition to 25 lakhs. Sorry, either this or that, but no risk, whichever is less. So finally, you end up paying 25 lakhs. Okay. Now, if convicted, see, offense is offense, then prosecution is taken up. Then the court you may go for compounding. If he doesn't go for compounding, then if convicted, then refund of the remuneration received. And also he has to pay damages to people who might have suffered any loss. Okay. Where an auditor has been convicted under this section, he shall be liable to refund the remuneration received by him to the company and pay damages to the company, statutory bodies, authorities, members, creditors, which includes banks, for loss arising out of incorrect or misleading statements in the audit report. That is why you have to be very careful when giving letters, certifying balance sheets, etc., which are going to be presented to public sector banks or even private sector, mainly public sector banks. Do not support the client and give a wrong statement, because banks have a nasty habit of saying, no problem, sir, nothing, sir. And then if that loan becomes NPA, they will use auditor as a scapegoat for filing NAFRA complaint or institute complaint and all that. Be very, very careful. Do not oblige a banker, especially a public sector banker, where, so if he wants genuine balance sheet, I'll give it. If you want it well in time, I'll do quickly. Quick service can be done. But wrong things, if you're going to ask me to certify, no. As a banker, you will say all sorts of things. I'm so sorry to say this. Sometimes even I ask them, sir, you are a banker, you are aware of the balance sheet, etc. How can you tell me to do this? No, Mr. Srikanth, you don't understand the realities. What reality? Anyway, central government may specify any statutory body for other authority for ensuring prompt payment of opposite damages. So they might appoint a body, statutory body, to obtain settlement from the auditor. It's a nightmare on institute, my dear friends. Let this lecture remain in your mind ever when you are going to sign a balance sheet when you become a practicing CA. So where there's a contravention by an audit firm, then any partner or partners have acted fraudulent manner, then partner or partners concerned and the firm shall be jointly and severally liable. Okay. For the liability, civil or criminal. Okay. So with this, we have come to the end of audit of the company's statutory audit. What remains is one more topic, which is called cost audit. Okay. Cost audit. If you have any questions, do ask them now. Start asking, so that at the end of the session, 5 minutes, I will cover, answer your questions, and I will close the session. The central government may prescribe maintenance of, but see, one more thing, my dear friends, cost audit, we saw it when we did accounting. Certain companies we found that books of account will include records of cost also. Details of cost particulars also. But all companies do not maintain cost records. Central government will prescribe maintenance of particulars relating to the utilization of material or labor or to other items of cost as may be prescribed. This shall also be included in the books of account kept under section 128 by that class of companies. Okay, as we already saw. But central government, before issuing such order in respect of any class of companies, regulated under a special act will consult the regulatory body concerned, constituted or established under such act. See, you need not do very elaborately. You need not, don't ask me, sir, what are all the industries that are regulated, sir? I can give you, it is available in the Rule 3. I can give you. Rule 3 has Table A and Table B. I can give you Table A, Table B and all, but don't waste your time. See, these are the things that students will waste time and they will end up not studying important topics. So please don't waste your time. If you want maximum, remember, central government may prescribe cost records. They, before doing that, if there is a regulatory body, they will consult it. There are two classes of companies, okay, Rule 3 and Rule 4. So class of companies for which maintenance of cost record is prescribed is contained in Rule 3. Out of those companies required to maintain cost records, such companies covered by Rule 4 of these rules shall have mandatory cost audit. So Rule 3 will refer you to maintenance of cost audit. Now there they will talk about which are all the companies. Then you will go to rules. So there in the Table A, Table B, they will say regulated, non-regulated. You need not bother about that. Table A, Table B and all. No need to know. Just for information. Rule 3, which are the companies, they will prescribe the limits for companies for maintenance of cost records. Rule 4, which out of those companies which are maintaining cost records, what is the threshold limit for cost audit? So Rule 3 very clearly says compulsory maintenance of cost records of the following classes of companies. Companies, including foreign companies, engaged in the production of goods or providing services specified in Table A. Table A. I told you, Table A has 6 regulated services. What they are and all? Don't. No. Don't waste your memory. Table A, regulated 6. Table B, non-regulated 33. As of now. They will include maybe later, as of now. What are these sectors? General knowledge. If you want to read it. After the exam, not now. After the exam, if you still want, you download, you go to, what I suggest, no, don't go to any websites, all sorts of nonsense websites, blogs. Please use incometax.gov.in. There the Income Tax Act, correct version is there. Similarly, mca.gov.in. There the Companies Act and other corporate laws, correct latest amended section will be there. Please do not refer to any, I'm sorry to use the word blogs, some expert opinion and all that. Please. Unfortunately, when you go to Google, Google doesn't know the difference. If you put Table A, 6, what is Table A of company, it will give some nonsense. Some lawyer firm would have put up something in good faith. They want you to get some knowledge, but don't rely on that. See, in good faith, they want to spread knowledge. I'm happy about that. But you being a professional, a member of the institute, should not rely on such second-hand, third-hand information, not third-rate, third-hand information. You should rather go to the fountainhead of knowledge, which is the BAR Act. Then read it. Form your own opinion. Then maybe you go for some kind of a supportive documents, etc. Are you able to understand? For income tax, if you want any reference book, only book I will recommend is a book written by a great man called Vinod K. Singhania. Every year they publish direct tax book. Taxman publishes it. It's a good book. That is the only reference I would ask you to. Of course, if you want to read Sampath Iyengar, what is that, Palkiwala, you can. Kanga and Palkiwala. Your nearest Southern India Region Council or even your branch will have a fantastically equipped library. Just to go there, sit, refer and come. I use the SARC library a lot. Our institute has got well-equipped physical libraries which can be accessed by every member. You are entitled, no need to pay any fees. Just walk in for reading and referring, no fees. If you want to borrow only, you have to come here, you have to pay some fees. Okay? Please, we have excellent resources. Do not rely on some unconnected, unrelated websites and all that. No. When your client comes with such garbage, just tell him, please wait. And then refer to the BAR Act, show him, this is the BAR Act. Read it like that. So because I found many textbooks are wrong. The only book I rely is for income tax is Singhania. Okay, Vinod K. Singhania. And for company law, no book is good. Better you read the BAR Act. Okay, there was an earlier treatise by Ramaya. I used to refer to that regularly. And so MC Bhandari, there is a beautiful procedure book. Now, the law is becoming so complicated. There are 8 volumes. But if such a copy is there in the Institute library, please go refer to it and read. I humbly suggest you and I don't need maybe Ramaya, maybe, okay, maybe, okay, once in a while. Otherwise, you won't really need it. Believe me when I say that. Okay, so having an overall turnover from all its products and services are rupees 35 crore or more. So any of these companies, whether regulated or non-regulated, if it's having turnover from all its products and services of 35 crore or more, it has to maintain cost records. Out of these companies, those companies which are prescribed under Rule 4 should have mandatory cost audit. Okay. Micro, small enterprises are exempted from cost audit as defined under the Micro, Small and Medium Enterprises Development Act. Okay. It may order compulsory cost audit, which are covered under the above section, which are required, but for which, based on net worth and all that, they have prescribed, based on net worth, turnover, etc., they have prescribed both for regulated and non-regulated sectors. They have prescribed certain norms, which you can refer to at a later stage. Now, for exam purpose, no need. An audit conducted under Section 148 shall be in addition to the audit conducted under Section 143. Okay. So, obviously, but still they want to be sure that statutory audit should not be nicely parceled off as cost audit. So, once upon a time, in Section 224, the 232, old law, cost audit was there. There they used to say, since the number of cost accountants is not sufficient, a chartered accountant having the required qualification can conduct cost audit. Of course, statutory auditor cannot be cost auditor, but even though a cost auditor is not, because at that time, the number of practicing cost accountants was very less. We are talking about 1990s, 80s, why 80s, 70s it came. Cost audit came in 70s. So only few cost accountants who are willing to practice. Everybody wanted to go and get employed. Therefore, they said there are not enough cost auditor, what to do? Whereas there were many chartered accountants who were double qualified, triple qualified. They were also cost accountants. So they said, if you find a chartered accountant who's got cost accounting qualification, please take him. But that was actually there for a long time till the new law came. Only now they've removed that. So earlier we were qualified to audit cost statements or cost records. Because believe me, in all fairness, our own syllabus has huge cost audit, cost record, costing content. Now, only it's all special, it's a sort of non-core activity now. But once upon a time, cost audit was also core. Cost company law, cost accounting, everything we knew. We were ultimate authority. The cost statements, including other statements to be annexed to the cost audit report, shall be approved by the board of directors before they are signed on behalf of the board by any of the directors authorized by the board for submission to the cost audited report there. The qualifications, disqualifications, rights, duties, and obligations applicable to auditors, that is statutory auditor. We saw now, for last 2 sessions, we have seen now, all that, so far as may be applicable, will apply to a cost auditor. It shall be the duty of the company to give assistance and facilities to the auditor, etc., etc. As usual. Who shall be cost auditor? Cost shall be a cost accountant, as defined under Section 2, Section 28. Who shall be appointed by the board? So, statutory auditor appointed by shareholders, branch auditor appointed by board on the basis of recommendation of central statutory auditor. Rather, board. Cost accountant, cost auditor also appointed by board. Statutory auditor cannot be cost auditor. Cost auditor will comply with the cost auditing standards. Okay, so this is the same as statutory auditor. We saw that now. Who will be the authority? Like that, right? Cost auditor will submit his report to the board. The company will furnish the audit report to the central government within 30 days, giving full information for any reservation, etc. For then, the central government, if found necessary, will call for further information. And finally, the audit will be closed. So the cost audit report, that's called closure. With that, the central government will close it and throw it. Okay. If there is any default, there is a penalty which is similar to 147 and 2 to 4 of 147. Same. Penalty is also there. Let us see what question has come. Yes, only cost accountant can be cost auditor, sir. Earlier, chartered accountant could also be, as I told you. Now you are only no. You can't be a cost accountant by qualification. Should be as defined. You saw that now, as defined under section 228. That means a cost accountant in practice. A cost accountant holding certificate of practice. You should be a practicing cost accountant. Okay, sir. Which is good. A lot of opportunities for the members of those institute to become. Thank you. Wonderful. We had a great session, I hope. I had a great session thanks to your interaction and questions and all that. Looking forward to hearing good news of your success in times to come when we'll be there. Any questions you can always raise now. Wait another 2 minutes if you want. If there are no questions, we can as well close the session. Yeah, but don't draw. You're drilling exams, the diagrams make it attractive. I don't know, sir, because than use diagrams. My guru used diagrams to understand and teach. Use diagrams to teach and understand. But please do not reproduce diagrams in the exam as an alternative for writing. Humble request. Don't use diagram as an alternative because you're a little bored with writing. Don't use diagrams. You write the answer. Okay? Because institute sized answers, you don't find diagrams. Institute sized answer, no diagrams. So don't use diagrams. Auditing paper, yes, workflow diagrams, that you use, not in comparing. Use diagrams to understand. Then verbalize with words. Humble request. Okay, thank you. See you. Bye. Sir, class over, sir. Thank you. Bye.